So Applied Digital Corporation have had a really good previous month. Where can we expect this stock to head in the next few? In this video, I'll be finding out exactly that by putting in their financials into my system and looking at some of the news surrounding them. It is important to say before we do start, I'm not a financial advisor. None of this is financial advice. You should always do your own research before buying into the stock market. Please do leave a like and subscribe. With that being said, let's get into this video. So in the last month, this stock is up 22.13%, and on the year-to-date chart, they are up 49.85%. Looking at the news surrounding them very briefly, I've just seen that from the Insider Monkey, they have said 2 months ago, Applied Digital Corporation among the worst AI stocks to buy under $10, and then 6 hours ago today, they have said why Applied Digital Corporation is one of the best AI stocks to invest in under $10. So that is quite funny. It just goes to show that nobody in the world of finance actually knows what they're talking about. That is me included, by the way. I don't even know why you're watching this video. Only joking. I have a slight idea. But moving on, we can see why they have had this massive uprise within the last 6 months. So a few months ago, Nvidia hedged big on Applied Digital Corporation by investing within this company. For those who somehow don't know, Nvidia is a massive player within the US stock market and just the market in general, as it is the world's largest stock currently, almost reaching a $4 trillion market cap, which is ridiculous. So if you aren't sure what this company does, they design, develop and manage high-performance computing, infrastructure and services to support the needs of AI, machine learning and other advanced computing applications. The company operates across 3 primary segments. One being data hosting, which provides infrastructure for crypto mining. This of course is massive at the moment with the hike of Bitcoin. Cloud services. This allows GPU-based cloud computing solutions optimized for AI machine learning tasks, and HPC hosting, which supports demanding computational workloads. So it is pretty big stuff in which they do, and with Nvidia backing them, there is clearly a demand for their services. So this is possibly a very good stock to hold going into the new year, but let's look at the financials and decide that for ourselves. My t-shirt just fell off the wall and it's smashed, so that's great. So looking at the past 5 quarters, we can see the liquidity rate, retention rate and free cash flow. So looking at the liquidity rate, we can see how much cash to debt they have. Ideally, you want to see this on a 1-to-1 ratio or more. In the case of this company, it is actually way below. It is 0.1 or just 0 bang on. However, this company has been founded since 2001, but it is still very early, especially being their transition to AI recently. So I wouldn't be too concerned by this, and it is still expected to go up looking at the trend lines. Now looking at the retention rate, this is how much money they retain within the company. Looking at the net income, we are still in the negative. However, it does seem to be on its way up now, at least, with the trendline predicting that they will be in profit next quarter. So that will be interesting to see. At the moment, we are seeing a retention rate in the negatives, well in the negatives, with some of them being down 147%. So the only way is up from here. And now we can see the free cash flow. This is projected to decrease. This is spare money in which they have at the end, in which they don't have any of. So it's pretty clear to see that this is not an important metric for this. However, it is steadily, in fact, it has decreased last quarter, which is quite surprising. So that will be interesting to watch. So looking at the 365 volume to price chart, we can see both trend lines are exponential and they are increasing. However, the price line is not on par with where it should be at the moment. But you can't base too much off of this, with the recent price hike being due to Nvidia's huge investment in this company. So anything above this trend line can be seen as unnatural, but like I said, with the investment, it's not a concern at all. In fact, if anything, it's kind of a good thing that it's beating the trend line in this case. So I'm not too worried about that in the slightest. And on a short-term basis, we can zoom in and see that actually we are closer to the trend line than it would originally seem. This 90-day average will include the news to a better extent, if you catch my drift. This is good news for this company, and this is why you want your stock price to match the trend line, as in the future you can see a huge drop off here if you're constantly on your trend line, it shows a less artificial price. However, this doesn't take into account news, such as on the 365-day chart, we can see that Nvidia's huge investment looks like it artificially spiked the price. However, it wasn't artificial in the slightest. It's not like a meme coin. This really shows what a meme coin is, basically, or a meme stock in this case, and this is not one at all. So looking at some of the statistics for this company, we can see a PE ratio of 0. I don't know if that's just not loaded or not, but a lot of these online services will not give you a PE ratio for this stock at the moment due to the volatility. Looking at the beta, speaking of volatility, we're at 4.53. That is compared to the Nasdaq. Anything above 1 essentially means it is more volatile than the Nasdaq, and depending on which way the price is going, which is currently positive, it can be seen as a positive or negative thing. In this case, it's definitely a positive thing. Looking at the average volume to volume traded, we are currently just below the average, which is a good thing. It means that there is less volatility at the moment. However, that is still very high compared to the average. So that could potentially show a bit of volatility in the next few weeks, essentially. So looking at the Sharpe and Sortino ratio for this company, we can see a minus 18.06%. That is really not good. And the Omega ratio is 1.78. That is also not good. This shows short-term risk to gain potential. This is ultra short-term. So if you were looking to trade this within a week or so, this is what you can expect. So within the next week, this is predicting it won't be a good week or few days, essentially, as it is currently Friday. But that does not mean the stock is bearish at all. It's just a short-term thing, and this can be wrong. So what do the analysts think on a 90-day projection? So they see a bit of volatility, but they do see a potential upside of about $16 and a downside of about $4. Personally, I see it going to about 13. However, I do think their Q4 report might be in the profit. They might be in profit, so that will massively spike the price if they do manage to. Based off of 7 analysts here, we can see a strong buy as they project the price by the end of 2025 to be around the $12 mark. So it is clear they don't see much growth from here, but they do definitely see growth, which is a positive thing. But I personally think they might be underestimating this stock. So that is it for this video. I hope you have enjoyed. Again, I'm not a financial advisor. None of this is financial advice. If you could subscribe, it would be greatly appreciated. Quickly before I do end this video, my long-term rating for this stock is a B, and my short-term, that is within the next month, I would have to put as a D just due to volatility and the price being very high at the moment. But I do see this going much further as it is a very promising AI stock, and it's clear to see that Nvidia agrees. So thanks for watching, and I'll see you for the next video.